It's tax time. You've got an LLC. What does this mean for you? Today we're going to talk about whether or not you need to file a Form 1065 for your LLC and other taxing options that you might have. Let's do this. Hi, my name is Jim Hart. I'm the founding attorney here at Hawthorne Law. I started Hawthorne Law to help visionaries, online entrepreneurs, and creators like yourself figure out how to protect your business legally and build something that matters. So last week, I sent out a message to my subscribers on YouTube to ask them what it is that they wanted to see more of from me, what type of videos they wanted to see, and you came through. And by the way, while I'm talking about the subscribers, if you haven't already, click the button here below and make sure you subscribe to my channel, hit the bell thingy, and you'll get notified whenever I post new videos every Tuesday and Thursday at 7 p.m. As I was saying, you answered in resounding force, and I had a tremendous response from that message. 72% of you said you wanted more videos about, you guessed it, LLCs. And not only that, I sent a follow-up message to that and said, okay, you want to know about LLCs. What specifically do you want to know about LLCs? And 53% of the people that responded to that said they wanted to know about the tax implications of LLCs. Is that because taxes are due in just a couple weeks, or is that because that's what you really care about? I don't know. I decided I would do a video here and answer your questions about the tax implications of LLCs. Specifically, do you need to file a Form 1065? So when you file your LLC, you actually have 4 options for your taxing status for the LLC. Hold on a second, a little parched. I know, this is crazy, right? You can do the default, which is a sole proprietorship. You can have a partnership, which is a little bit different than a sole proprietorship, but it's the default if you have multiple members in your LLC. You can elect to be taxed as an S-corporation, which I've talked about before, linked to video up here. Or you can elect to be taxed as a C-corporation, which is slightly more popular with the tax law changes that happened in 2018. There's advantages and disadvantages to each one of these options. I've talked about this in a prior video, but I'm going to touch on them again here just to make sure we've cleared the air, and with all the updates to the tax laws and everything else, that you know what is available to you when you form your LLC. The one thing I do want you to understand is when you form your LLC, it's not just one option. You don't just form your LLC and then you can file taxes as an LLC and you do whatever you need to do with the LLC. No, that's not the way it works. You've actually got multiple options. As I mentioned before, you've got 4 options, which I just talked about. The default is sole proprietorship. The advantage to this is it's really easy. You don't have to do anything. You basically have to keep track of your income and expenses from your business, and then when you go to file your 1040 on April 15th, or before April 15th, or after April 15th, whenever you file your 1040, when you go to do that, you're going to fill out what's called a Schedule C, which is going to go behind your 1040. So just like when you're doing your itemized deductions, if you still do that, there's a separate schedule you fill out. For your income and losses from business, you fill out Schedule C, and that's where you put your information from your LLC. So obviously that's really easy and that's really simple. With everything in life that's easy, there's also something that's not so good about that. And in this situation, there are some definite disadvantages to electing to be taxed as a sole proprietorship. The biggest disadvantage electing to be taxed as a sole proprietorship, I should say for your LLC, is that you're going to receive a slightly higher tax rate than if you choose a different entity. And the reason for that is you're going to have to pay self-employment tax, which is 15.3%. That's your FICA, your Medicare, your Social Security tax. All those things are encompassed in that 15.3%. And you're going to have to pay that on all of the net income from the business, regardless of whether you paid yourself a salary or not. And actually that is a benefit. You don't actually have to pay yourself a salary from your LLC. I've talked about that and how to pay yourself with your LLC up here, but you don't have to pay yourself a salary. But it doesn't matter. You're still going to pay 15.3% on all the net income from the business. The other major drawback to filing as a sole proprietorship for tax purposes is that you're going to be the IRS looks a lot closer at self-employed people who file Schedule C, and they audit them at a much higher rate than if you elect a different tax status. Second option is partnership. And a partnership is the default, just like a sole proprietorship is the default if you're a single member LLC. If you're a multi-member LLC who is not in business with your spouse, then the default is a partnership. And if you have a partnership, then it's not as clear-cut as putting all your income and losses onto Schedule C. You actually have to file a separate tax return document, which is called a Form 1065, which is what I referenced in the title to this video. So basically, this is just the same as a sole proprietorship, except you have to file this separate document. A Form 1065 is an information return. That means that you're not going to owe any taxes as a partnership entity, but what it is going to do is it's going to say who are the members of the LLC, and here's how much income or loss should be attributed to each one of them. And then you'll take that and you'll put that information into your 1040, and then that's where you'll pay your self-employment tax. Again, it's a flow-through type of return, an information return, and you'll put all the information in there, fill out your 1040, and you'll pay taxes from that. Does that make sense? Comment below and tell me that this is making sense. I want to make sure that you're still with me here. All right, the next option that I'm going to kind of touch on briefly, I won't spend too much time, is a C corporation. A C corporation, if you elect to be taxed as a C corporation, then you're actually going to file an entirely separate tax return that's going to pay its own separate taxes. As of 2018, the corporate tax rate changed permanently to 21%. It was up, I think, 35%. Now it's at 21%. So obviously there's some benefits to doing it that way. And the main benefit to doing that way is it's a low corporate tax rate. So if your personal income tax rate is going to be really high, then maybe you want to look at filing a C corporation for your business, because you may actually pay less taxes by doing it that way. However, there are it's not necessarily cut and dry, right? There is such a thing as double taxation, which means you're still, if you pay yourself a salary out of the C corporation, you have to pay tax on that. If you pay yourself a dividend on the net income from the C corporation, which you do have to do, you can't just hold the money in the C corporation, you do have to pay dividends out. If you don't, you could be taxed on that. I know this gets complicated. If this is beyond where you're at right now, talk to an accountant, okay? Or tax attorney. And obviously another main disadvantage of filing a C corporation is all the complexity in corporate paperwork and things like that you need to do if you're going to elect to be taxed as a C corporation. We good there? All right. Number 4 is S corporation tax status. I've talked about this in a lot of videos. Video up here. The nice thing about an S corporation is you get a lot of the benefits, the sole proprietorship, without having to pay 15.3% self-employment tax on all your net income. The way it works actually is you pay yourself a salary, and you have to pay yourself a reasonable salary if you're an S corporation. So whatever you would normally make in that business, if you were working for someone else, that's considered a reasonable salary. I realize that's a very broad definition and not necessarily easy to wrap your head around, but that's the way it works. So you have to pay yourself a salary. Anything over and above the salary you can take as a dividend. You would just pay your normal income tax rate on that. You do not have to pay the 15.3% self-employment tax on all of that. So that's why there can be some strong benefits to filing an S corporation. Now, with an S corporation, you also have to file a separate tax return. It's called a Form 1120S. That's due by March 15th each year, or you can ask for an extension. It's also an information return, which means you're not going to have to pay any taxes on that. So there you have it. Enough information to be truly dangerous this tax season. Hopefully that was helpful to you. If you have questions, my recommendation is you definitely should talk to an attorney or a tax accountant in your area who can help you with these issues and help walk you through all the steps that you need for your business. If you're interested in learning more about how to start and run your LLC, I just launched a program on Kickstarter. Link over here. You can sign up for that, be one of my early backers at a greatly reduced rate, and help me develop a program that's truly going to be able to help entrepreneurs and online businesses and visionaries moving forward. That's it for today. Have a great day, folks. We'll talk next time.